Hey, what's up, traders? So I've been thinking, in light of our new COT course that has been just released last week, Commitment to Traders course, that I want to actually help teach you how to understand the Commitment to Traders report. Now, we do have a course, so it goes into details. I'll talk about strategies and risk management and how to trade around news and all that good stuff. But I want to be able to help exclusively our YouTube followers, our TradingView followers, and even those who are enrolled in our Forex course. So I want to do a trade challenge with you guys. I'll give you all of the details sometime this week. I'll do a YouTube video explaining what the details are. So just keep an eye out for it. But let me know if this is something that you're interested in by simply dropping COT trade challenge in the comment section. That lets me know that you're interested, and then I'll be motivated to drop that and give you all the details. This will be a trade challenge, and I'll give you a sneak peek. We're going to talk about certain pairs based on the COT report. I will drop an analysis on YouTube. You will tell me what pairs you're looking to trade. I will help you identify which way to trade. And that's it based on the CLT report. So again, if you're interested in that, I will drop a video sometime this week before next week explaining to you a little bit more in details. So that being said, drop those comments and that let me know that you're interested and hungry for the CLT. But other than that, guys, this video is about looking at the CLT report and looking at odd pairs, AUD, which means Australian dollar. And I'm going to show you what the CLT is revealing to us and what we can do for this week. Now, if you've been following us for a while and you've seen the last video about the CLT strategy and even the video before that about how to understand and read the CLT report, you know that the report comes out every Friday for us. So that being said, Friday we'll have a new report. We're going to look at it, dissect it a bit, and then we're going to learn how to trade for the following week. So let's get into it. All right, so first we're going to look at bar chart. We're looking at the COT report here. And if you are unfamiliar with this, I suggest that you go back to our previous COT report videos where we actually have two. The very first one will give you details on how to access this one here. All right, so we're looking at the non-commercial here, and we're going to look at the Australian dollar, as I mentioned, in particular. And then we're going to compare it with another currency, and I'm going to show you why I'm going to pair it with this specific currency, for example, like the Canadian dollar. So we can see as of this past week here, on May 7th, this was the numbers here. And so we're looking at Australian dollar, and we can see that they have a net positive 18,719. This simply means that they've probably exited some shorts and increased their longs. So overall, they have a net 18,000 longs. That's why it's green. That's why there's a positive number here. So because this is the first currency of the pair for odd CAD, we're hoping that price will head to the upside. Now, let's look at CAD being the second currency. We have a red number, and it's best to actually pair it with one green and one red. The reason why is because the second currency, when we have shorts here or more shorts for net position, that means also headed to the upside because this is the second currency. Whenever you have two currencies, they're battling against each other. And that's why we trade a currency pair. So short for the second currency means upside. And then long for the first currency also means upside. So this is what we're looking at right here. We're looking at something like this here. We have odd CAD, and then we're going to separate it just like this. We have longs, positive 18,000 for odd. Then we have a negative 6,000 for CAD, which means they're both pointing to the upside. And this is where we get this uptrend here from, at least specifically for this last week here. So all of this here, this consolidation, this uptrend pushes through the resistance zone, consolidated, and now it's continuing higher. It's all from this legacy report here. So that being said here, we're making higher highs and higher lows, which is the ingredients for an uptrend. And then we reach this peak here. If I scroll to the left, I wonder why it stopped here, right? Just like any uptrend, we have to have some sort of pullback. It doesn't just continue to go higher without it slowing down and pulling back. And then we want to understand why did it stop at this area right here. And so when I look back, this is the area right here. This is my new resistance. This is what the money makers look at here. They see all of this consolidation here in the past. They know previously in the past when price rejected off of this resistance zone, sellers dominated, and that's why it is stagnant right here as well and consolidated. We can just continue to look left and we see a lot of wicks and candles poking through this zone right here. So that being said, we have our classic break and retest. So I'm just going to draw my trend line and do something like this here. And now we have our break in our previous resistance, consolidated, pushed higher. And so I'm going to tell you what I believe is going to happen because my bias is still an uptrend based on the commitment of traders report. I believe price can come and pull back and do something like this. And you can already see it pulling back. Is either going to stop around this zone, possibly around the trend line. Why am I saying this zone? Because I'm looking at this previous wick rejection area here. So all of this area is important to our market makers. We can see, draw a straight line. This is like our minor resistance level here. This is our minor resistance level. It broke past it, and I can see price coming back around this zone here. If not, and decides to pull back even further, it can even come back and retest this support. But either way, I believe it's going to come and pull back. So from where price is currently at now, if I get my measuring tool, to where I believe it's going to stop is around 30 pips. That's nothing. And if it continues to drop further to our main support zone, that's about 80 plus pips or so. All right, so now that I have my established uptrend based on my commitment of traders, because we have a positive 18,000 long for Australian dollar and we have a negative 6,000 Canadian dollar, I'm looking to only buy. So as price has reached a peak, you only want to buy at a higher low in an uptrend. Here's our higher low right here, in this zone right here. This is our minor support zone where it broke, it consolidated here, it broke. We're definitely going to see some sort of reaction around this zone here. You can see when there was consolidation, couldn't break this resistance zone and it's tried day after day after day, finally broke. So if it pulls back, just like our classic break and retest, it should pull back around this zone. If it pulls back even further, this will be the second area that I'll be interested in possibly buying here. So if you even bought it right here, I would say to buy with the low lot size, make sure you're conservative. You have your stop loss outside. If you don't mind risking, so if you entered here, if you don't mind risking about 50 pips, I think you're fine. You want to drop your stop loss away from structure, so at least away from this area right here. If you keep your lot size conservative, you can still stay within the trade. If you want to wait, now this is specifically for swing traders. If you want to wait even longer, you can wait to see if price comes here and start to reject. And if that's the case, all you need to do is pull out your trend line like this and wait and be patient for price to come down and do something like this, right? You're still in your uptrend. All you do is pull out your trend line and you'll do something like this. All right. So hopefully that makes sense, guys. Now, if you're new to the commitment of traders, you know that the report comes out every Friday. That is just in a day and a half or so. So it comes out at 3:30 p.m. EST. And what we want to see to continue this uptrend is we want to see that Australian dollar increase their longs. So if it's more than 18,700, our bias is still long. And then the Canadian dollar, we want to see them increase their short. So if this number is greater than minus 6,000, so if it's like a negative 8,000, for example, that means they're adding more shorts here, which should push the currency pair higher. And if this is higher than 18,000 in longs, that means it also should increase our long bias. So that being said, guys, this will be a nice buy for next week as well, if that happens with our commitment of traders. So I didn't want to give too much, guys, but if you are new to the commitment of traders, I really highly suggest that you watch the previous videos. I'll make sure I link it in the description and also at the end of this video. Other than that, guys, again, make sure you type in the comments below about our trade challenge for the COT report, because I will release a video giving you thorough instructions sometimes before the beginning of the week. I'm excited about it. Hope you are too. And I look forward to seeing you again in our next video. God bless you.